NVIDIA, which has now hit $4 trillion in market cap, and the stock is at a record with that 2.5% gain that we are seeing here today. There was no particular catalyst in today's session that was leading NVIDIA shares higher, just more of the flows that are going into large cap technology that we've been seeing. And let's talk more about all of this. And for that, I want to bring in my contributor for the morning. That is Kevin Gordon, Director and Senior Investment Strategist at Charles Schwab. So Kevin, we've all been sort of waiting for this NVIDIA move, $4 trillion, a big milestone for the company. What does it mean for the recent tech trade that we have seen? I mean, sometimes when we look at this kind of move, we're like, is this the end of a move, or is this the beginning of the next leg?
Well, I think what's interesting is that this is not just an NVIDIA story. It's not necessarily just a mega cap story. If you look at the breadth of semis as an industry, it's actually improved quite sharply over the past, few years relative to where we were. A couple of years ago, you were at 0% of those companies. If you're looking at the industry in the S&P 500, none of them were above their 200-day moving average. Now you've gotten to above 80%. So this is not just a one stock story. This is not just a mega cap story. I think that there has been some pretty significant movement under the surface. So I think that's a positive thing from the standpoint of, you look at the largest companies in the S&P. The 5 largest companies by the end of the second quarter, they made up just slightly less than 30% of the S&P 500's market cap. So that concentration risk has definitely crept back into the market, but it's not being accompanied by just a few stocks that are leading the market higher that are actually outperforming. There has been a pretty significant, resurgence in breadth across, not just within semis, but across other, parts of the cyclical components of the market too. Things like industrials, like financials. That's where leadership has been concentrated. And I think that's been a really important story.
And so do you think that the move that we've seen in semis, which, as to your point, has been broader than just large cap tech and the largest like an NVIDIA, do you think it still has room to go?
I mean, if you're going to use breadth as some kind of indicator, yeah, I think there's probably, and I would say up the cap spectrum, much more in the large cap space as opposed to the small cap space, because even within the moves that we've seen in the, what's thought of as the growth world, the mega cap growth stocks, actually, if you look at Russell 1000 growth and Russell 1000 value year to date, their performance is almost identical. Huh. So it's not necessarily this growth versus value thing, but if you look at Russell 1000 growth versus Russell 2000 growth, there's a much bigger discrepancy in year to date.
In other words, small caps
exactly.
Are underperforming.
So it's been more of a cap factor story than it has been in terms of, is this just a growth trade or a value trade? There's been almost this sort of sweeping performance from the larger names, but even in Russell 1000 growth, I mean that's almost 1,000 companies, or 1,000 value. That's almost 1,000 companies in each index that are doing well. So again, it's not just a mega cap story, but in the broader large cap universe, that is where the strength has been so far this year. And I think it's a reflection of where we've been in terms of tariffs and where tariffs have taken, the trade war has taken the biggest bite. It's been at the smallest end, not necessarily at the largest end.
NVIDIA making history this morning as the first public company to reach a $4 trillion market cap. We're joined now by Stacey Raskin, Bernstein Managing Director and Senior Analyst, to talk about this milestone. Still with me as well, Kevin Gordon, Charles Schwab Director and Senior Investment Strategist. Stacey, thanks for hopping on to talk about this. Whenever I think about NVIDIA and chips, you're the guy that I want to come to and get some perspective.
I appreciate that. Thank you.
Yeah. So, I mean, was this feels inevitable? Do you think it was sort of inevitable that we get to this $4 trillion level? And what do you think is responsible for the latest leg in NVIDIA?
Yeah. Look, in the markets, nothing is truly inevitable, maybe. Now that being said, AI is probably one of the largest, technological inflections, in our lifetime and probably in history. And they're, right at ground zero creating it. And so if that is going to be as big as I think many and myself think it can be, why shouldn't they be benefiting from it? I mean, they should be presumably benefiting from it more than anybody else, and clearly they are. So in that sense, I would like to think that it could have got here, and it did, and I'd like to think that this is not the end as well.
Well, and one of the things that some investors have talked about is the valuation of NVIDIA. Even as it has climbed and climbed, though, the PE has not gone crazy because the company keeps earning more money. At what point, would valuation look stretched? Are we anywhere close to that yet?
Well, versus its history, clearly not. I've seen it trade, as high as 60 times earnings. And, this has sort of been a controversy the whole time. I remember, before this started, it was expensive. It was actually more expensive than it is now. And just as the stock itself was running up, a lot of people used to make the point about valuation, but they were sort of conflating valuation with market cap. And I made the point time and time again, I may have even made it here, that to the extent that the stock price had gone up, the earnings had gone up even more, and the multiple had actually come down. And if you look among all the AI stocks, quote unquote, right now within semis, it's probably one of the cheaper ones now, as long as you believe that the numbers are achievable. At this point, like they look pretty achievable. Yeah, the valuation looks pretty good to me.
And it's funny, Stacey, because we're talking a day after you caught my eye with the note that you came out with that said, U.S. semiconductors, time to awaken from tariff slumber.
Yes.
Is that the big stumbling block for an NVIDIA and its competitors?
Well, maybe less so. So tariffs in general, people, the whole sector, not just in semis, but everything kind of got whacked in April during Liberation Day. And with all the back and forth and pauses and everything, people have sort of, dismissed tariffs, I think, as a risk. I mean, they clearly must be, because the markets probably are at record highs. And, Trump sent out some tariff letters a couple of days ago that were mostly consistent with the reciprocal rates that he talked about before. And it looks like those rates may come back on August 1st. And within semis in particular, we have the 232 investigation that's going on. And my assumption is that we actually will see tariffs specifically on semiconductors at some point, probably soon. And it is something that I do think investors have not really been looking at. So it's something that should be. Now, as far as that goes, the AI space actually may be a little bit more insulated. Number one, just because the demand, I think, is actually quite real. But in terms of the tariff structures themselves, most of the AI servers that are used in the U.S., it turns out they actually come in through Mexico. And there's another broader carve out with this. Stuff that comes through Mexico that's USMCA compliant, which these servers actually have no tariffs on them at all. So I think like tariffs, nobody's completely insulated if it actually gets implemented. But I actually think the AI supply chain, in some sense, may be somewhat more relatively insulated than other areas of the space because of that Mexico avenue and some other things. Plus, like I said, I think the demand in general is off the charts. If costs go up, I think spending still happens.
Yeah, Stacey, I was going to ask, separate from, 232 and what happens with those investigations, if you just look at what's being proposed now in terms of countries, and we'll find out whether, August 1st is a firm deadline. But beyond that, or in addition to that, I think one of the interesting things that's come out recently, especially with all the letters that have gone out so far this week, is this focus from the administration on transshipments from China.
Yes.
Whether there's an enforcement mechanism, I think that remains to be seen, and how well that can be enforced. But how are you thinking about that, in terms of risk, whether it's from China or from, certain Southeast Asian countries that are then caught up in a little bit of this predicament, rock and a hard place between the U.S. and China?
Yeah, it is true. And so they are trying to block transshipment. So what the letters said, basically, if we've got higher, I'll make an example. If we've got higher tariffs on stuff from China, you're buying stuff from China into Korea and then shipping it out, it's going to be charged a tariff at the higher rate, right? They don't want to be able to use transshipments through other countries to try to block off China or other countries like that. So that is a risk. Now, how they would actually track that and the administrative and logistical overhead that would be required to actually track and enforce something like that, I don't know. And I actually don't know that the capability to do that among these companies actually exists right now. So there's a whole other debate that this probably like we could have at some point on that. I don't know how they will enforce it. But clearly, like the Trump administration is trying to carve off China from the rest of the world. And in some sense, they may be setting the countries who play in both markets against each other, because things that the U.S. wants to do, I mean, China's going to want the opposite. And, in some sense, a lot of these countries will, or a lot of these companies will be between a rock and a hard place. I don't exactly know how this is going to be dealt with as this stuff finally gets implemented, if in fact it does get implemented. I don't know.
So all of this notwithstanding, Stacey, we know that you still like NVIDIA, and we've talked to you before about other semi stocks within the universe that you like. But just to remind viewers, you're a buy on NVIDIA. What are the other places where you still see upside and opportunities, especially given, as you said, NVIDIA actually looks pretty fairly valued even versus some of its competitors?
Yeah, so I in our specific coverage, I like the AI names. I like NVIDIA and Broadcom. I think tactically, If I had to pick one over the other, we like them both. I'd probably lean a little more towards NVIDIA just because it is cheaper. And I think they've got pretty smooth sailing, I think, through the end of the year. Like, again, the Blackwell supply for them has kind of opened up. And they've zeroed out China. You know, there are sanctions on what they can sell into China. They've zeroed it out. So to the extent that they can work around those at all, if they can, that would represent upside. Broadcom has a lot of AI upside as well. It mostly comes next year. So that starts to get attractive. I'd be looking at that one on dips at least. I also like Qualcomm. I seem to be the only one that likes Qualcomm. The issue with Qualcomm, there's no real catalyst, and like earnings doesn't really grow because, you know, they sell stuff to Apple and Apple's designing them out. Like this is totally known, but it does limit the EPS growth for the next few years. But I actually think under the surface, things are looking really good there. And, you know, you get to 2027 maybe when Apple is kind of out of the model. Some of that goodness starts to really show, and the stock is very, very cheap. So I think it's at least worth sharpening pencils on. I'm mostly lukewarm on most of the rest of the space. Like my analog coverage, they're very expensive. They're actually seeing some upside, I think, near term. Most of them are calling for a cyclical bottom, which maybe, although that would also look the same as tariff-related pull forward. And I'm of the belief that we probably are seeing some pull forward. And again, my names are fairly expensive in the analog space. We've been a little lukewarm there. AMD have been lukewarm as well, although I kind of understand why that stock has been running because, you know, the big story for AMD is the MI450, which comes next year. It's not for a year. You can dream right now. That number can be as big as you want. We saw the same thing last year around this time when people were thinking how big the MI300 for them could be in 2024. It turned out not to be as big as people thought. But for a while, the stock really worked, and we're seeing similar dynamics now. The other one in my coverage is Intel. Intel's kind of a basket case. Like I always joke, I've made my career being negative on Intel. I'm kind of afraid to short it. We're neutral on the stock, right? Because I mean, it's sort of just like event-driven and headline-driven, but it doesn't feel like a long to me either. It's going to be a slog. Call me in a few years on that one.
Yeah, it's hard to find the Intel bulls even after all that
tough.
has happened, Stacey. It is great to see you. Thanks again for hopping on.
NVIDIA briefly touching that $4 trillion market cap. What is the latest, my friend, and where does it go from here?
Yeah, I mean, obviously, this is a huge swing from what we saw in January, where we saw NVIDIA lose that $600 billion, in market cap as a result of the kind of revelations that we saw from DeepSeek, that Chinese AI company. The idea was, look, they managed to train their AI models, which they said were kind of up to snuff with the likes of OpenAI's models, on less than top-of-the-line chips. There was a whole kind of meltdown on Wall Street, people basically freaking out, saying, well, why do we need to think about NVIDIA then? Then kind of the thinking started to change into, okay, well, they may have trained this on a less than top-of-the-line. There's been more skepticism coming into that and questioning whether that's true. But it's come out now that it's better to have a high-end chip to kind of run those models. So even if, say, they were developed using less than top-of-the-line chips, the top-of-the-line chips make them better, and so naturally that means that people are going to go for those top-of-the-line chips, i.e. NVIDIA. So we've seen that kind of swing. There's the talk of sovereign AI, where countries are looking to get their own AI chips. We saw that in Saudi Arabia, in Europe, where Jensen Huang had been. And then there's the talk of the kind of China equation being taken out of NVIDIA's own earnings. So they obviously took that $4.5 billion hit in their most recent quarter based on products that they weren't able to sell anymore through bans. They're expected to take an $8 billion hit in this quarter, but Wall Street is basically saying, okay, but that means that China's no longer in the equation. There's no more guessing as to, are we still going to see revenue? Are we not going to see revenue? If we do see revenue, is it going to be small? Now it's just the revenue that they know they're going to get, and so it puts them on more solid footing to make those projections. So it seems as though Wall Street appreciates that much more, and then obviously the coming Blackwell Ultra chip that's just down the line.
So Dan, since I have you, I'm going to switch gears hard on you. I just want your thoughts on this other headline that crossed, which is that OpenAI browser launch could be coming, Dan. That's per Reuters. Just curious to get your thoughts on that, Dan. I mean, of course, a lot of investors are immediately going to think what that could mean for Google. We should point out Google, tacking on about 1.3% here.
Yeah, I would hate to be Google. That's basically what I think of that, right? There's constant conversation now as to whether or not OpenAI is pulling users away from Google. Are people starting to use these apps more than Google? Chrome stands as that gateway for people to start using Google right away. That's where you search. That's where a lot of people start their internet kind of experience or journey if they're not going into an app or something along those lines. Now, if we start to see OpenAI come up with their own browser, well, they're going to be in ChatGPT immediately. And it's worth pointing out that Perplexity has its own browser as well. They talked about that today. So we're starting to see more of these AI companies really push into Google's space, just as Google starts to struggle with the kind of search aspect of their business. Don't forget, though, they do have their own Gemini AI that they're hoping can kind of supplant the search in the long run.
Yeah, I get the excitement around that headline. I would want to see, though, how that OpenAI browser, how it actually performs. I will wait for the Dan Howley review of that, though, for me. Thank you, Ben and Dan. Thank you both. Well, for more on what's next for NVIDIA after starting the $4 trillion market cap club, let's welcome in now Matt Bryson, Wedbush Securities Managing Director, Equity Research. Matt, it's always good to see you and to have you on the show. Start right there. What a big milestone for NVIDIA, for Jensen Huang. Matt, you know this company so well. I'm just curious to get your top line thoughts.
Yeah, I mean, things have gotten better for them over the last 4 months, right? We just heard, DeepSeek was a concern in January. What we actually saw was China investment in AI picked up over the next few months, at least until they were prevented from buying the NVIDIA chips. Back in January, people were concerned about Blackwell. The products weren't fully baked. That got taken care of. It's picked up over the last 3 months. Just came back from Asia, and everything sounds really strong in terms of supply chain is trying to keep up with demand, and right now they can't. So there's more room for NVIDIA to sell Blackwell, whether it's Blackwell or Blackwell Ultra, over the next few quarters. And then we get into next year, and you have all these big sovereign players. They come and spend, and that's just in addition to the cloud. So arguably, NVIDIA has more visibility than it ever did into market growth. And so there's just a lot of good things happening for NVIDIA.
Is there any sign, Matt, that you've seen that big tech, which of course that's Jensen Huang's big customers, that they are slowing down at all their AI spend?
Not in the near term, right? So at least what I'm hearing again is that NVIDIA and TSM just can't get enough Blackwell chips out to satiate the market at this point. And again, it's always been a question about what happens next year. Can cloud spending lift again? But talking about NVIDIA being de-risked, well, now that you have all this sovereign spend that gets added to the cloud, if cloud spend doesn't go up as much next year, it just matters less.
Matt, I also want to get your take on this FT headline that dropped this afternoon. NVIDIA, they say, plans to launch a new AI chip designed specifically for China. They say as soon as September. So this would be, I guess, a chip that would be compliant with U.S. export controls. How should investors be thinking through a headline like that, Matt?
Yeah, Josh, we've heard that a couple of times over the last few months. There might be another NVIDIA chip. The question is kind of what the total demand is going to be. So you've got to assume that it's going to be less capable than what they were shipping previously. What they were shipping previously, the capabilities were already reduced. And so it comes down to it's all additive to what there is now, but it's probably not an 8 billion revenue adder. It's hard to say, is the market 4 billion per quarter? Is it 2 billion per quarter for this less capable chip? I don't know. But again, at this point, with China basically taken out of the equation, whatever they get is additive.
What are the risks, Matt, that you think investors here need to think about? Would it be valuation? Would it be competition? What would be on the wall of potential worry, Matt?
Yeah, Josh. So I think it's thinking a few years out, maybe. But it's once you get past 2026, and again, we've got all the sovereign spend coming in, and so you just have this big buffer for NVIDIA, I think, in the next year. But where are the killer applications, right? We haven't seen them yet. But could it be OpenAI's new browser? Could it be whatever device is coming out of IO, so the Johnny Ive startup that OpenAI just bought? And in my mind, these things will happen. It's just a question of timing. And I know people have thrown out the Cisco paradigm of 1996 is the big concern for NVIDIA, right? There was all that spend, and things were overbuilt. But remember, between 1995 and 2000, when Cisco kind of started to fall off, there were huge productivity gains. And I would say we will see those productivity gains. We haven't yet. And until we see those productivity gains, I think there's just room for more spending around AI.
Matt, always good to see you and to have you on the show. Thank you, sir. Well, for more on all the latest market moves now, let's welcome in here Ryan Dietrich, Carson Group Chief Market Strategist. Ryan, great to see you, especially on set.
Yeah, it's fun to do this in person from your fine city, New York. Thank you for having me.
Great to have you as always, sir. Let's pick up right there on this discussion about NVIDIA. What a milestone for that company. What a milestone for Jensen Huang. You saw that headline drop. What do you make of it?
I think it's a good reminder for investors. What we think about it in February, right? DeepSeek came out. I don't know exactly how much NVIDIA was down, but it was crushed, right?
Yep. And
now here we are back to making all-time highs. I mean, we are in a bull market. This is a global bull market. Things get beat up a little bit. I've jokingly called this the Rocky Balboa market because the day after a down day, you tend to bounce back really strongly this year, and that stock just really shows that. But at the same time, I guess I'm not too surprised because that's a leader, and this is a bull market.
I wouldn't be surprised, Ryan, if some investors, they see when a company hits a milestone like that, maybe they think, all right, well, that's it. I missed my chance. I missed my opportunity. Best days behind it. Is that the right way to think about it as an investor?
I'd say no, because I think we've heard that at $1 trillion, $2 trillion, $3 trillion. So here we are at 4. So I'm not saying, I do think it'll probably keep going up because we're in a bull market, like I said there. But those round numbers, you can see some of that with Dow 40,000. You sometimes see a little bit of that. But when it comes to these big market caps, I'll tell you, let's see about earnings. I know they report at the end of earnings season, but I'll tell you, death, taxes, and NVIDIA beats on earnings. I joke, those are the 3 things you can always count on in life. We'll see, but it's been that way, obviously, for the last, going on 2.5, 3 years when they have earnings.
Amy, I want to bring you in as well. What's your take on NVIDIA hitting that milestone?
I mean, I think it matters in the sense that we've had so much concentration risk, Josh, and this only builds it even more. I speak to a lot of institutional investors, and their biggest fear hasn't been downside, it's been missing that chase. And here we are again. And I think, certainly you could call that a bull market, you could call it exuberance, you could call it froth. It doesn't really matter what you call it, but, when people have to jump in the pool, we see that quickly in options, and that's continued to happen in NVIDIA, and I wouldn't be surprised if it keeps going from here too.
A broader question, Ryan, while I have you, since I know you study history so well, history buff that you are. What does history tell us about the second half, given the first half we've just had?
Well, I call it the sweet spot. Like you play golf, hit the ball, the sweet spot. When you're up between 5 and 10%, like we were this year, so not up the whole bunch or not down a whole bunch, just nice and solid. The rest of the year for the S&P has been higher 13 out of 15 times.
That sounds pretty good, Ryan.
Pretty good, and you lay on one more. When you're higher in May and June, like we just were, usually those months aren't that great, so it's kind of rare to be higher. The rest of the year this time is higher 15 out of 16 times. These are just 2 stats, but when you look at these things, I'm an old school message of the markets, disciple. What's the market telling us? I've come on with you for a while, so the market is telling us it wants to go higher. And add what Amy just said there, looking at sentiment, I mean, there's some froth, I'll admit. But what we're looking at, a lot of hedge funds have missed this. A lot of institutions. Look at that global fund manager survey, Bank of America. I mean, wildly underweight U.S. stocks. So you can kind of pick and choose there, but I'm not seeing froth that worries me significantly here, Josh. I still think it's a bull market, and I think this summer surprise rally will continue. One more. July's been higher 10 years in a row. My math is right. This year could be 11 if we're higher, tie the all-time record. I think there's a good chance that happens. And then as we get into the fall, maybe get that indigestion, whatever the worries are going to be. But there's a broad-based rally happening, and we need to listen to what the market's telling us.
All right, listen to what the market tells you. Things are looking good, Ryan says. What if, my friend, you do take a stumble here? Let's say there's a pullback, there's a correction. How do you think investors would respond and react to that? Do you think they move right back in, they buy that dip?
Well, we've seen that from retail crowd. I mean, retail has, we had the 10.5% drop in 2 days on Liberation Day, and what did we see? I mean, honestly, the retail crowd were the ones that got back in. Fortunately, the smart money and the big money, they've kind of been a little 1 foot in, 1 foot out. So I think they will. At the same time, dollar cost averaging, I think a lot of investors have learned. We've seen these big pullbacks and scary times before. Every year, scary headlines. I mean, I came here last August. You and I were doing this last August. What were we worried about then?
Sir.
The yen carry trade unwind. And that was a really scary deal, really big drop. Now it's like, oh, that's right, the yen carry trade unwinds. I'm not minimizing tariffs or whatever the next worry is, but earnings are hitting all-time highs. Profit margins are new highs this cycle. Yeah, there's some froth out there, and maybe some parts of the market are a little pricey. But honestly, it still looks pretty good.
Let me ask you, Amy, if we took a tumble like that, you think investors move right in, they buy that dip?
It's interesting because I was thinking about August 5th, the Volmageddon, whatever you want to call it, with the VIX spiking to 60, and that would have been a good time to get back in, right? It's these volatility potholes that come when there's a lot of liquidity that's left the market, which typically is August. So July is a good return year. July is a low VIX time, but then August is one where you actually do see VIX kind of go up 15% usually, because there's some sort of low liquidity stumble that we get. It could be yen unwind, it could be anything. Those typically are times if you were missing out on that chase and you do need to jump into that pool, those are typically good times to do it.
Ryan, I get you out on this. So when you're talking to clients and they say, all right, Ryan, things look good, you're constructive. What's the wall of potential, or what are the risks I need to have on my radar?
Well, clearly tariffs in one tweet. We know that. But I'll tell you a little step further, potentially a Fed policy mistake. We're in the camp that the Fed should have been cutting earlier this year. Yes, Powell has said we're not going to cut because of tariffs.
You agree with Trump. It's too late, Powell. That's what you're saying.
I'm not going that far, but we do think he should be cutting already. I think he said 300 basis points in cuts. No, we're not saying that much, Josh. But the reality is, what if they should be cutting? Let's be honest, he was a little late hiking. I think he's a little late cutting, so that's one potential little pothole that's out there. There's still time, but I do want to say one thing at the end. I know your dad watches. Your dad said he liked me, so hi, Mr. Lipton. Just
Big Ryan guy.
Give a shout out to your dad.
Guarantee I get a text from Andrew right after this.
So good there. But again, thanks for having me as always. Love your city, and I'm going to have some good steak tonight, so I can't wait to go out. Yeah, thank you.